Wall Street welcomed the long-awaited agreement on the U.S. federal debt ceiling, but the market gave a muted response because U.S. trading floors are closed on the public holiday, Memorial Day. Thus, investors are taking a breather, revising their risks and portfolios. The market is braced for another turbulent week with the focus of the crucial non-farm payrolls. On a Friday, the Dow Jones climbed by 1%. The Nasdaq gained an impressive 2.19%, and the S&P 500 grew by 1.30% to close at 4,205 points. The futures market is thin because of the national holidays in the UK and the United States and the European Union. The benchmark stock indexes are still trading higher. The S&P 500 is expected to trade in the intraday corridor between 4,200 and 4,240. Even though U.S. lawmakers did not settle a deal, and the evidence of a progress in the talks encouraged a rally on Wall Street. Optimism about the U.S. public debt outlined the PCE price index released on Friday, and the report indicated that inflation accelerated in the United States. Another market catalyst was the growth of shares related to artificial intelligence. Nvidia shares rose by 2.5% after a 24% jump on a Thursday, lifting the company's market value to around $960 billion. Marvell Technology shares leapt by 32% after the chipmaker said it would double its annual earnings. In addition, in the corporate segment, Paramount Global shares increased by 5.9% after receiving a $125 million investment. From 11 sectors included in the S&P 500, 8 sectors went up, with the high-tech sector taking the lead. The S&P 500 grew by 0.3% for the last week, and the Dow Jones slipped by 1%. The Nasdaq jumped by 2.5%. The stock market is opening a new week with a relief because the preliminary deal on lifting the debt limit was reached. An agreement to lift the $31.4 trillion debt cap was reached late on a Saturday. The deal puts the debt ceiling on a hold until January 2025 in exchange for spending cuts and reducing government programs. Treasury Secretary Janet Yellen on Friday set a deadline for raising the federal debt limit, saying the government will default in a Congress does not raise the national debt ceiling by June 5. So, despite the optimism, the market has a new ex-date, so anxiety has not disappeared completely yet, while the White House debt ceiling agreement is a great news. The U.S. government still has a cash flow problem that should be settled in the due time. Investors are also bracing for potential volatility in the U.S. government bonds as the Treasury is expected to quickly replenish its empty purse with the bonds once the debt ceiling is released. Liquidity is set to decline while interest rate expectations will increase, and this will cause banks and the non-oil sector stocks to fall behind. Among the market sectors, they could benefit from the deal are defense and energy stocks, which underperformed during the talks. After the euphoria of reaching the agreement ebbs away, the market will have to assess how spending cuts can affect the specific sectors as well as the US economy as a whole. Besides, a rather tough and prolonged political standoff in Washington may prompt the rating agencies to downgrade the US credit rating. Rating agency Fitch placed the US credit rating on the watch for a possible downgrade late Wednesday, while Morningstar placed the US credit ratings on a Thursday with negative implications. Previously, S&P Global stripped the United States on its top AAA rating due to debt ceiling issue back in 2011 days after the last-minute deal. The downgrade contributed to the fall in the US stocks, causing the S&P 500 to lose about 17% between late July and mid-August 2011. In addition, do not forget that the week will be loaded with the crucial data on US employment, and the prospect of a default is taking a back seat for a while. Hence, the market is now focused on the Fed's policy agenda. Last week's data showed jobless claims, falling personal incomes, rising the labor market strong, and inflationary pressures rising again. In this context, investors attach importance to the non-farm payrolls for May, and the US public and private sectors expected to add 180,000 jobs, excluding farm employment. Wage growth could have eased a bit. The jobless rate could be increased. Any surprise could dampen market sentiment. And the non-farm payrolls will be the last report before the Fed's policy meeting in June, when the central bank could take an interest rate decision. Before the PCE price index was released on a Friday, investors were certain about the pause in the monetary tightening. At the beginning of the week, CME derivatives now estimate the chances of a federal funds rate hike by 25 basis points in June at 60%. The currency market is also trading sluggishly, and the US dollar index retraced from a 6-month high and settled at about 104.20. The intraday corridor for the index is seen between 104 and 104.50. The agreement on the US debt ceiling boosted the risk-on mood on the global financial markets and pushed the US dollar down as a safe haven asset. Importantly, the prospects of a default have not been completely eliminated. To clear up things, the agreement still needs to be approved by Congress. And the new deadline on June 5 is still a risk factor. On the back of political jitters, the US dollar index was able to maintain the uptrend of recent weeks. The greenback pulled back, but not deep, and actually remained stable even when the deal was announced. This is due to the fact that the debt ceiling has not been settled yet. Besides, the US currency is supported by increased expectations of the rate hike in June. Also, the market are focused on a large bond issuance, which the US Treasury will carry out after the deal is nailed down. This factor will support the US dollar in the short term. The Canadian dollar is able to recover a little amid the weakness of its American rival, having edged down by 0.06%. The USD CAD pair is trading at about 1.36. The instrument is likely to trade in the intraday corridor between 1.3570 and 1.3630. Canada's finance minister reported that Canada's fiscal deficit narrowed to $30.89 billion in the fiscal year of 2022-23 as the post-pandemic recovery boosted tax revenue and spending while financial aid was reduced. Revenue rose by 8.6% between April 2022 and March 2023, reflecting a broad-based improvement in revenue flows amid economic growth and the waning economic impact on the pandemic. Canada's GDP data is due out later this week, and the economy is expected to pick up. Today, the loonie gained ground a little on the early growth of oil prices because the deal on the US debt ceiling was lifted, and the event pushed the risky assets up. At the same time, the uncertain outlook for energy demand caps oil prices. So that's the intrigue around the OPEC Plus summit. On the back of speculations about oil output cuts, oil prices opened on Monday in the red. Brent crude futures lost 0.7% to trade at $76.37 a barrel, and WTI futures shed also 0.7% to trade at $72.18 a barrel. The oil market is going to trade quietly amid a national holiday in the United States. The crypto market perked up in response to the debt ceiling deal and surged by 3%. On Monday, the growth was moderate, but Bitcoin managed to sustain the ascending trajectory. The flagship crypto added another 1% and settled at about $27,800. Popular altcoins are trading mixed today. Ethereum and Litecoin gained 2.4% and 1.9%. Other top altcoins shed from 0.3% to 1.9%. Following a rally at the weekend, some tokens retreated. Ethereum came under the spotlight. A wallet dating back to the Ethereum initial coin offering in 2015 caught the attention of the crypto community after it suddenly moved a significant amount of funds. The wallet, which was completely inactive after the ISO transferred all of its 8,000 tokens to another newly created address on a Saturday. Data from the Etherscan network shows. In total, the transfer cost about $15.2 million at today's exchange rate. In addition, recent data from a CoinGraph showed that Ethereum processed $3.01 trillion in transactions, in contrast to Visa, which processed $3.08 trillion, indicating the massive adoption of the technology. Ethereum is the second largest network with a current market capitalization of $227.8 billion, according to CoinGecko, compared to $538.96 billion for Bitcoin, ranked number 1, and $82.8 billion for Tether, ranked number 3. As for the intraday outlook for Bitcoin, it could surpass the high of $28,000 for the first time since May 10, but could not settle at this level, and the token is facing a challenge to overcome resistance at $28,300. If Bitcoin is unable to test it, it will retrace to $27,650. Alternatively, if the crypto breaks out and tops $28,300, it will climb to $29,000. And this was a look at the financial market day from InstaForex analysts. Our team wishes you successful trades and increased profits. Make with InstaForex and see you on the channel tomorrow.